Yeah, Cata Tortoise Capital, cohort 1, small group coaching, June 24th, summarizing the insights from the confident communications model that I briefed last night with Hamad that you should all listen to. But the central idea was this. In the discovery phase, phase 1, foundations, you're pulling up parts of yourself that are heavy and that you're just going to discard. You say, hey, I don't need that. I don't need to be carrying that baggage with me, or whatever it is, that belief, that process, that whatever it is. And when you learn to just set that down and you're lighten your load, it's easier to go up the spiral road around the mountain, which is the path to mastery. It turns out that the teachable moment, the learning moment, is when you can set that down in public and just say, hey, I'm not going to, that was a problem that I had and I'm working on it and I can leave it alone. It turns out that there's gold in that. That's where the gold is. And what you're doing is you're marking your pathway of learning breadcrumb by breadcrumb, but because it's gold and heavy, it stays there and it marks your path for others to follow. And when you go around the mountain in a spiral, because you don't walk right up the side of a mountain, that's too hard. You go around in a spiral. When it comes back around and you're up another 100 feet, you can look down and say, oh yeah, that's where I was. I remember that. And you can actually help others who are just encountering those things for the first time. And that's where the each one teach one works. That's the idea behind craft knowledge and martial arts training, where the black belts have to go back and teach in order to ascend higher in the rank structure. They have to be active teachers to show that they can learn to relook at things through the beginner's eyes. And when you can do that, that actually opens you up to further receive guidance from the next guy higher on the mountain from you. So your active teaching and sharing and helping others actually opens you up to receive grace from others, because the universe is going to give you what you give. And so your intention on helping. That's why it's so darn important that you guys are posting charts of your trades with markups in the chat room and allowing me to share commentary with others. You're doing the hard work, showing them the way with courage to be able to learn in public and to say, yeah, I learned to let that go. That's where the gold is. That frees you up to get more of the next good stuff, and it lightens your load as you climb up the mountain. When you go from development into production, it turns out that all you have to do is overcome the hurdle rate, that there is some level of performance you have to achieve in order to be sustainable, resilient, robust, self-sufficient trader with the skills to learn from your own performance and self-coach. Better with a tribe, but so that you can self-coach. So as you keep going up the mountain of development, as you're building skills, what you're actually doing is you're not breaking through a wall, you're not tearing down a wall, you're simply going up higher, you're building a ramp to go over that wall, and it turns out not to be an obstacle at all. And so the model of that steady, continuous improvement of your long-term expectancy, that's how the pyramids were built. All of those little individual trades are these blocks of stone that you're sliding along and making the ramp and moving the next bigger stone up a 0.5% grade, a 2% grade, whatever it is that you're trading at, whatever percentage of portfolio. That's how steep the ramp is. But that ramp allows you to overcome the hurdle rate, which is that level of performance I have to have that pays for the effort, that pays for the infrastructure and the business and the structure, the sunk cost. So that turned out to be a really powerful idea for Hamad, as he has just, I believe, come into the developmental stage and has overcome the anxiety phase of the discovery phase of discovering those different parts of himself that he has to contend with. And his his trading has taken on a new maturity and success, almost as if by magic lately. So knock on wood, but it's worth watching that video from yesterday because that was the first spontaneous speech of it that came out of what was just initially the first prompt to my AI writing partner, which I've been practicing with for 18 months. So I actually now have some graduate level skills on how to shape that dialogue because the size of the context window is so large that it remembers everything that's in that threaded discussion. And so if you now take a deliberate path, you can start setting context and it will take all that into account as it continues to refine its answer to the point where the AI and I are having conversations like, hey, here's my initial guidance. Do you need any clarifying instructions? And yes or no, and it gives me some things. And then it says, here's an example. Is that what you're looking for? As yeah, that's what. And it's genuinely a learning conversation between me and the AI partner that is staggering to behold. So more of that to follow. I wanted to get that out of the way and just make sure that you listen sometime this week to that video with Hamad. You're going to be pleasantly surprised when you see that. More to follow in writing on the course, and we'll get all that done. But I wanted to share that with you. That's what I've been doing this week. Hot as shit at the soccer field. Heat index of 106 this morning. Holy smokes. So we only went 90 minutes. I gave him off the last half hour. We were playing 20 questions and logic traps with Coach Ken, and playing some Jenga and things like that in the shade. But man, oh man, this is a brutal week. All right, fellas, over to you. And who's up first?
I'll go first if that's cool.
Fire away.
Y'all see my screen?
Yes.
Okay. I'll make this part fast. I have some graphics at the bottom. Still working with my Quant Connect programmer. We've done a phase 2. There's a lot of nuances with going live in probably with any system, but certainly in Quant Connect. So he's programming some things like if the system goes down or if you restart it, it saves its state so it can restart correctly, and those kind of things. 2 weeks ago, I think it was, Ken, I had reported that the market classification was not working very well. It surprised me, probably surprised you too. Turns out that was a little premature, and it didn't quite sit right that it wasn't working. So Everett and I talked, and he went back and looked, and sure enough, there was a bug in the code. He had just gotten it working, I think, that day, so we hadn't had a chance to really vet it. So kind of lesson learned there. So I've been working with him on fixing the market classification on system 1, which is the PRX system. And I'll show some of those results here down below. Real quick, guys, the ones I talked to earlier, are y'all good with Thursday, 6 p.m.? Luke had sent me a message here right on the side, right as I was talking to y'all. So y'all good with that?
Yep.
Thumbs up, thumbs up. Okay, cool. And I'm going to continue to work with the programmer. We're probably a week or two from paper trading a live system, or live trading the paper system, paper account, and then another couple of weeks of managing that before I'll go into, well, try to get close to 100 trades. And then I'm going to continue to analyze the system, including the market classification stuff we're just worked on today. And then the market system analyzer, thank you, Ken, market system analyzer in as far as what maximum size can I trade, just because the system has a good return or even a good expectancy doesn't mean it's very tradable, I'm finding, just because of drawdown. So aha moment is good. That is the Jocko Willing good. Got to throw in a little plug for my Aggies playing for the College World Series right now, championship. And so one of the guys broke his legs. He's the number 6 draft estimated to go this year. broke his leg coming around third in the semifinals or the regional, excuse me. So he's been out for the whole College World Series, and we've still been doing well. He was our #1 player, but he's wearing these good hats, and so it's the when adversity strikes, good. Now I get a chance to overcome something and learn something new. So I've kind of taken that attitude the last couple of weeks that they've been talking about that, and so same thing with what I kind of ran into with the market classification. If you look down here, here are some results. Let me zoom in a little bit more. This is just a straight out of the box PRX crypto. I shouldn't say straight out of the box, but SMA 15, 20, and 50. And these are 30 minutes bars. And this is running it on 10 symbols. I had to drop AA because it just really wasn't returning that much and had a low expectancy. The expectancy, the best I got was 0.1. But other than that, it's the same ones I had listed. I think last time, if anybody's interested, I can give you a list. I also plan on going through the rest of Ken's suspects and just seeing if I can find better candidates. And the main thing I'm worried about is the drawdown, which we'll talk about in a second. But as you can see, your net R gain is highest with a 15, but your 20 and your 50 have better expectancies, and the 20 is running a good net R gain as well. This is 4 years, 10 symbols. So again, common sense things that you don't think about. It's if I'm running 4 years and I make 800 R, is that 200 R a year? I think and yet when you annualize it here down here, you see it's 63%. And if you take 63% and multiply it by, or excuse me, if you take 100,000 and multiply it by 1.634 times, you end up at 775 R. But since I'm fixed size on these, Ken, I guess this is a question for you or anybody else. So the issue is if I make 800 R in 4 years, but I am a flat position size just for the back test, I'm not using any, account percentages or markets money. I think that really means I'm making 200 R a year, right? Because I'm fixed size. So it's not the annualized number there doesn't really apply in this case, I don't believe. Is that right? Oh, don't hear you. You're muted. You're still muted, Ken.
Yeah. So if the portfolio was 100K and you're doing fixed position size and you're risking $1,000 per position,
Yes.
800K at the end of the
Yes.
trading at 1% of the initial portfolio.
That's what I'm doing here. Yeah.
Yeah. Then that's massively good.
Yeah. And so again, the annualized gain of only 63%, I don't think applies since I'm not actually doing compounding, right? So if I get 7,
yeah, if you put that into a market system analyzer and showed them those numbers, it would probably be telling you to be trading at 3% of portfolio compounded.
I need to learn. I tried market system analyzer, really digging in for the first time.
Yeah.
And ended up either doing it wrong or got a very disappointing answer. But the main reason is because, so this is the 50, which was the most conservative.
Yeah.
Not to blow, hit you with the same stuff, but you can see this equity curve in here gets really flat. And what's really, and I do have a number that are greater than 1 R because this is a 30 minute. So there's a lot of gaps that knock me out. But the real problem is right down here. If you look at the weekly R distribution, there's a couple of, this week here is 26 R, 27 R for the negative.
Yeah.
So, I mean, again, I wouldn't have expected that. So I need to go in and analyze the stocks that I'm looking at as well.
Yeah. But on the other hand, you take a look at, this is the number of weeks that are greater than 20.
Yes.
So you got 1 and you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. You have 20 weeks greater than 20R,
Yes.
and you have 1 week less than 20R. So if you wanted to say something like, my worst week, I want to lose $5,000,
Okay, right.
then you'd be trading at $250 a trade
Okay,
rather than 1,000.
right.
So that one would drive you to trade at 1/4. So then what you'd have at the end of 4 years is 250 times 800, or $200,000
Right.
on plus $200,000 on a $100,000 account. After 4 years,
Yeah.
you would have doubled it once. You would have doubled it 1.5 times in 4. So that is, with the rule of 72, that is a 18. That's about a 21% compounded rate
Mhm.
of return, which is tying the record for the all-time greatest public hedge funds in the history of investing.
That's pretty good.
That's compounded at 21%. And that's not even scaling it as, like, if you traded
Right.
1/4 of a percentage of the portfolio, you would start with 250, but it would slowly increase.
Sure, right. That makes sense.
But even if you kept it at a flat rate, you would still be netting 21% on initial capital. And oh, by the way, uh, the 200 grand that you make is not being used to fund the 250. So that's earning 5% because you've got it stored in some inflation protected. So yeah, those numbers are really good.
Yeah, I'm really pleased with the overall. And again, not to, look for badness and goodness, but it was specifically in this whole area right in here, there's a whole big drawdown. This is the worst, but
Yeah,
that's really, I think, what was stopping Market System Analyzer from, running a high number.
right.
The other thing is,
Just for your own shits and grins, you should drop the S&P's numbers on that
okay,
and just do the comparison.
okay, yeah, I'll definitely do that. Also, from a tradability standpoint, I've heard you talk about first in.
Yep.
So a number of these days have multiple symbols. That's the point, obviously, of putting these in.
Yeah.
There's a couple that have 6. Most of them are around 3 or 4 or 5, so I think that's tradable. So,
Yeah.
So anyway, that's this chart, and then so I had Everett run back through, look at it, and he finished that today. And so I've thrown the quick numbers together on this. I'll zoom it out so you can kind of compare them. I don't know if y'all can see that.
And this is with the
So this
market
is
system. Yeah.
market classification.
Market classification. Yeah.
So this was getting
Holy
rid
shit.
of the SMA. So I just took every trade from the PRX system,
Yeah.
then
Oh
ran
my
a market
goodness.
classification back on it. And
Yep.
you can see the expectancy jumps
Even
up.
better. Oh yeah. Because
Yeah.
now you're getting 2 to 3 instead of 1 to 2, and you're getting 3 to 1.
And
You're getting a 3 to 1 payoff.
yeah, this is looking, even better. And I needed to add Cliff to that actually. So that, it's
Yeah.
potentially going to get even better because Cliff's pretty good, obviously,
Yeah.
and on the system. So this is going to go higher. And then I didn't have time to analyze it because, like I said, I just got back a few hours ago, but I had him run the market classification. I was like, 200 on a 30-minute chart, 200 days maybe too long for a 30
Right.
minute.
You almost want 200 bars, which would be about well, you have 13 and a half 30-minute bars a day, so that would be 1/7.
17.
That would be about 30 days. About 30 days.
So yeah, I had him run it on a 200, a 100, and a 50 and a 10.
Yeah.
And
Yeah,
I
the
think
50 is probably the closest
yeah, or even a 25.
proxy.
I was thinking
Yeah.
of throwing that
Yep.
in the middle. But if you
Yep.
look at the 10, and so I'm going to run I'll run probably a 25 and then the 50 and see how it looks.
Yeah.
But yeah, this gets even better.
Yep.
Expectancy is 0.33.
Yeah, it increases your win rate a little bit here.
Mhm.
It improves the win and improves the losses a little bit. So yeah, that's like all good.
Everything just looks pretty good, much better. So I'm excited about that. I haven't run it through in the drawdown. Unfortunately, I was hoping the drawdown would go away, and I ran it also.
Yeah,
So
what you're going to probably want to do on that one is like if you had some kind of base position that was like fixed rate,
Mhm,
and then as you start adding gains, you just take a fraction of market's money
right.
and give it a base plus a whatever the expectancy of the last 30. So it's always rewarding you while you are in season. And when it starts to go out of season, you just drop it and use the baseline until the performance starts going back up and it shows you're better aligned. But still, I mean, it's hard to argue with that,
Oh, sorry.
with
Oh,
that.
no, no.
Hard to argue with that. Holy
This,
smokes.
this definitely smoothed out, right? I got rid of,
Yeah.
it's still a little flat in there, but it's definitely smoother. Again, it's over 1,000. The weekly is still as low, so I wasn't able to filter that out. I was kind of hoping it might have,
Yeah.
but there's other ways around it. The thing I need to do is add max R drawdown. I have to go code that in there, and that'll be a little bit telling. But in particular, I was looking at a way to filter, and this is the rolling average daily R. You have a 7, excuse me, a 30, a 90, and a 270. I was
Yeah.
almost thinking of taking the, rolling 90, and if it gets below 0.1,
Yeah. That's what Luke does.
yeah, that's just going to cut off this entire section here,
Yep.
which is if you look at exactly when the weekly drawdowns are, so somewhere around 122 to 170 is below zero. And if you look in here, that's all these big ones right here. So
Yeah. The only thing you want to just, the thing you got to beware on that one is that some of those big drawdowns were followed by I just lost my,
yeah, that's true. That would change my curve pretty, wouldn't
yeah.
it? Well, again, I would trade it so it takes all signals and then use that as a master system and then
Yeah. It's like this one was followed by a really good week.
yeah,
This one was followed by a really good week. And so you don't want to be negative for so long that you end up missing. Like that one really made the curve.
yeah,
That was really a helpful chunk. So um, it
good
might
point.
even be something where you just say, look, if I exceed 20 or 15 in 1 week, just stop for the rest of the week
Just stop. Yeah.
and then reset. I mean, paper trade it and then look at what the shape of the equity of the expectancy and win rates are. If it starts turning around, then you could get back in.
Okay. Well, there's some good things to test and Quant Connect, I'll have to code extra stuff, but the good thing about it is it kind of does it all in batch. So if I can code it in Quant Connect, once I get that working,
Yeah.
it would be pretty realistic. And I don't know how to do that in Excel, but anyway.
Yeah. If you send me all of the just the R multiples, I
Okay.
can run that through a Monte Carlo and just show you what
Okay.
and MSA will do that too, but it'll show you what the average of 1,000 trades minus one full standard deviation looks like.
Okay.
And you're going to love that number
Okay.
because that's going to be somewhere around 40% a year, I
Okay.
guess.
Great. Very good.
And if it's trading at a C minus and it's getting 40% a year with automated trading, yeah. Then you guys need to establish a RIA fund and start
Well, what's RIA?
registered investment advisor
Right.
and start selling shares.
Okay.
Serious. And take 2% of money under management.
Okay. Sounds good. First thing I need to, I appreciate that advice. First thing I need to do is get this thing in production. I'm starting to just be, it's like, oh God, it's killing.
Well, that's the motivation though.
It is. Yeah, true. Very much so.
Because you'll draw $100 million of money to manage.
Wow.
And that's a $2 million fee for managing 100 million a year. Then that'll pay for programming.
Yeah, for sure, for sure. Okay, thank you. That's all I have.
Okay, awesome. Next up.
I can go next.
Okay, George. Yeah, I took a look at your the notes you sent me, if you want to look at those, or if we got other things. But yeah, it basically says the supported spring crossing with the mainline symbols. We want that.
Yeah, so I just wanted to ask you about how you think I should proceed. I don't know if you want me to go through what I've done or
Yeah, just show the show the results by symbol. There's some things I want to show. Yeah, the first two. Yeah.
so this is I'll just give people the context. So I've been working on some automated trading as well. It seems to be a popular topic. And I did some back testing. This is on the 3-minute chart. And it's the same patterns that we're trading more or less.
Yeah, leave it. Yeah, leave it there for a second. Yeah, so what you're looking for is an all-weather stock, CLF. Good in both directions, caught it to long and short, so you get a ton of opportunities, and it doesn't hurt you on the supported spring crossing. But when that one fails, you get that one, the collapsing dragon. So that's a good one. Yeah, go ahead, scroll. Yeah, EWW, you can see why I ask you guys to trade that one. Yeah, leave that there for a second, right there. You cannot argue with that. Me gusta Mexico. And McDonald's at times is not bad. The Kata 2 works, and the collapsing dragon works because it shocks people that McDonald's can lose money. So they always get trapped in on that one. Go ahead, keep scrolling. Let's see. Yeah, the S&P is hard because it oscillates so much, and the time frame that I think you tested in was primarily bull, so it doesn't have as many follow throughs. But it's not my favorite trading target for that reason, because it does not have the excessive volatility on successful days. It's just too big. Now, keep that in mind. Did you test DIA? Can you scroll up to DIA? Yeah. Yeah, DIA is better on the what was that last column?
I think that's the SSC.
Yeah, supported spring. Yeah, so DIA benefits from people wanting to buy quality after a sell-off. So that's one that I just really want you to always remember and never forget this. What that means is if you ever have a day when yesterday it closed here and it gaps down and it sells off to a fail stat, and then gives you a 1, 2, 3 entry in DIA, man, you take that. And your first target is to here, and your second target is to there, and your third target is to there. That's the pattern in DIA because it's baked into the cake as the premier value play. You know, you've got the 30 big fat large caps of the world, and when that whole thing goes down, are all 30 of the biggest companies in the world going to go? No, they're not going to go to zero. So that is an implied buying opportunity for everybody that has to put money somewhere while they're trying to figure out where to put it. You know what I mean? It's like buying the Dow 30 is always a great idea. And if you put the DIA's performance numbers over SPY, those 30 symbols give you almost indistinguishable performance compared to SPY, but you get more consistency. So never lose for your longer term systems, never lose sight of this number and DIA. And the Kata 2 is not bad, but you want to get on it right away. You can take that result early. Okay, keep going.
One of the things I was curious about is, do you think it'd be a good idea to trade like just the profitable ones from this list? Or
Well,
that-
if you take a look at the ones that I typically recommend early, the best one of them all was this. That's the first one that I tell you guys to trade. And then the second one I tell you to trade is this one. Because when this one isn't working, this is when it's not working. That's when DIA is working. So you actually have a nice pair trade right there. And then keep scrolling. Then, okay, stop there. Now, Brazil, I don't like as much. That's you have to be really tactical with that one. But when the market is good, the simple Kata 2 and what was that one again? Supported, was that SSC?
Yep.
Yeah. The International Paper, the most non-energy, non-metallic industrial company of the world. International Paper. Yeah, but it's a digital world. No, it's not. Look around. It's a paper world. And then the collapsing dragon here and the Kata 2 short here. So what that tells you is when McDonald's is double testing a bottom, just automatically go short there. And you're going to get that one. Keep scrolling. Yeah, cruise down to, let's see, PBW. Oh, I don't think you have it in there.
There wasn't enough liquidity, so I stopped trying
yeah.
to trade it.
Yeah, that one's tough. Let's see. Now the other ones, the XL series that I advise, E, F, I, and K. You've got something always working. And B, I guess, is the other one I like. You always got something working. This is the Kata 2 long. That's the reinforcing one. And this is the collapsing dragon. So, yeah, the ones that give you those big payoffs that are situational, there's a reason why I say EWW and DIA and these five here. You've got enough things going on there. And that's always interesting one there too, is Treasuries trades more like a stock than SPY. It's actually it's a better way to trade the short term than SPY because it dominates it in all directions. But yeah, with EWW, DIA, IP, then XL, E, F, I, and K, you really have enough to keep you busy, I think. And then I think there are some situational trades where NVIDIA is just in spite of this, NVIDIA as a psychological trade is amazing. It has now replaced Tesla, in my view. Tesla is just a trading thing, and NVIDIA is a better trader. It's unsullied. Yeah, scroll back. Okay, go to the summary by pattern. That second one. Yeah, I mean, there's nothing wrong with this curve. Your let's see, win rate is 0.37 and you're paying 2 to 1. And let's see. The best supported spring crossing one was DIA, if I remember. And EWW. So you're going to get the best part of that. And then these two are both pretty good. The Kata 2 short is really not bad at all. So you don't have to take the collapsing dragon if you don't want to. And you get 3 times the performance and twice as many opportunities. So that one looks like this. You get the first collapse, and then the second one doesn't even get back to here and then fails again a second time. So you're getting the second leg down, and that's the one that pays off 3 times better. And a good one on that is McDonald's. And IP was both pretty good for that. So now, one of the things you'll notice on those 4, none of those are story stocks or meme stocks or in the news as a big time attracting traders. So that's kind of like a stealth targeting in my view. So those I think would probably be the 4 I'd start with. And then I'd add the XL series. And otherwise, these numbers look really good.
Okay.
You know, the image that I gave Hamad yesterday, hold that right there. Just I need I just need the white space. Is that the in World War II, the Burma Road connected India with China over the Himalayas, and they built that by hand with tens of thousands of workers who were cutting rocks and smoothing them out, and then assembling those rocks, carrying those rocks in buckets, and then paving a road by hand to go over the Himalayas. And that's what every R of every trade is. It's another smooth rock, and over a long enough period of time, you can do anything. You know, the Japanese were horsing around down here, and those 2 allies were connected in order to hit the Japanese supply lines by the creation of that Burma Road, because they couldn't get enough tonnage flying C-123s over the hump. They had to have the road. So if they can do that by hand, so can you. And it's respecting the R of each little trade. Okay, keep going. Yeah, and this one, you know, if we took a quick look, I should have also remembered to say, CLF. I would add to that whole list. DIA, EWW. I mean, that's hard to argue with those big 3 right there. That's why they've been my 3 favorites. AI for a while, but I think its time has come and gone. It's just a trader right now. So I think those 3, again, plus XL, E, F, I, and K, gives you enough seasonality on any given day that one of those 4 is moving.
Okay.
And you use DIA for the broad US market vision, and then you use CLF and EWW as the narrowly focused specials that operate independently from that stack. And that should always give you a mover in here. If you had to, you could add Devon. But I think that would be enough right there.
Okay.
You know, I would also just tell you, hey, take a look at what Brian Lancaster is doing with XAU USD
Yeah.
on 5-minute charts for round the clock. When the US market ain't working, he's doing that. He is crushing that thing. He's operating at about a 0.7 expectancy on that one, and then also the Kiwi US or sometimes the Aussie.
Yep.
And that gives you something to do when the equities are closed.
Yep.
That's a 24/7 all seasonal strategy. So that's what I would do. And
Okay.
the sooner you guys get that thing auto trading, the better.
It's already auto trading.
Okay, let's go. Okay, what else you got? The good?
Yeah, I think I'm good. Thank you.
Okay, next up.
All right, and go next. I don't have much to show at this point. I decided to go to the very deep end and understand each trade type in depth. So I went and started with the SSC and started trade by trade, finding where it works, where it doesn't, where I get a lot of losses, where I get the big losses, and start analyzing to try to find where the optimal application of the SSC.
Yeah.
So I did a couple of exercises, much of it visual, because I'm still like learning the ins and outs of these trades. But one of the like conclusions that I found was that the SSC works really good when you are on a daily, the 30 minutes SSC, really good when the distance of the low of the daily versus the PSAR of the daily when it's coming down. That's when you find the biggest trades, obviously, because it's dropping.
Because it's a negative trend that has started to reverse with enough
exactly
duration that it's actually a turning point. Yep.
That changed from a 1.8 to 1 to a 3.2 to 1 type of trade.
Yeah.
And the other one that worked really well when the PSAR on the daily is pointing up, the distance between the low to the daily PSAR is under 1 standard deviation. Like when it gets really close and starts to pan up.
It's finding a normal support in a rising market.
Correct. So using like the risk reward against the daily PSAR.
Yeah, exactly. So, that's why I use that. The auto framer actually helps you find those symbols because it's counting a return to the 10-day high. So there's a swing trade move that's attractive. So it's not just you on the 30-minute chart that's interested in it. It's also the guys using daily charts on swing trades are interested in buying quality on sale.
Right.
So you're getting another whole demographic of buyers. That's really just the channeling system. You know, it's above its 200-day moving average. It's pulled back to oversold on a daily chart and has now started to move out. That's a COTA 2. A COTA 2 on a daily is going to look very nice on a 30-minute. When it's you'll get really favorable reward to risks.
Yeah, it improved the system a lot, at least on the SSC side. Yet to go to the COTA 2 and the other ones. The other filter that I found incredible, when I did the testing with like 40 symbols, I found that I had huge drawdowns between August and let's say September of 22, and August and November, or let's say October of 23. And I couldn't figure it out. So I used the swing filter, which is the LR30 versus the river.
Yep.
And sure enough, it pointed exactly the seasons where I should not be trading the SSC
Yeah.
on when it's falling in a big way. And it just gave me the filter, and the results that it gave me
Yeah,
were
it's probably in the winter time. It's deep in the winter, and the RL30 is sloping down, and it hasn't committed to a turning point yet, is what I think is happening.
correct. And
So,
the gaps against me for the SSC are in the beginning of the falls. So once it starts falling, the first 3 or 4 bars after that, the gaps are huge, and they were eating a lot into my trades.
Yeah.
So that kept me out of that, and the results were really good.
yeah, so the 4 seasons of MACD, the daily MACD, the 4 seasons, is a really good tool. You want to be buying SSCs in the spring, enjoying the COTA 2s all the way through the summer, and as soon as that thing rolls over into fall, you better have banked your harvest and tactical trading only. You gotta, that'll keep you seasonally aligned.
Yes. Well, that was the other one, closing the trade at the end of the day, if it's a red bar, or if I'm in the losing side, close the bar, because next day is
Gap
a gap
down.
a gap on the opposite side. So I got these 3. The results improved, like double the returns, easy on that. And I'm
With a couple
testing
simple
on
rules.
multiple symbols, and that's my status. I'll continue on this trend.
Keep marching.
Learning a lot.
All right, next.
I can go if nobody else is.
All ready?
Go for it. Sorry. Okay, I'll go. All right. So for me, I wanted to share this part, which is really that over the last 3 weeks in June, I've been trading EWW, DIA, and I've also added one more story stock that I had stopped trading. What I wanted to relay was I'm managing to 12R for each week, so for the last 3 weeks in June. And that has actually given me a big boost to my psychology, because I feel like after 6 months of trading it, I feel like I'm at a point where I feel like, okay, the systems exist and I can do this. Right. So there was a really big change in my thinking from trying to question whether this is possible or not.
Yeah. This is allowing you to trust the numbers.
Yes. Yes. And I do want to thank you for also pointing me to trade EWW and DIA. And what it has taught me is, in the past, I would trade story stocks, especially the tech stocks, and I felt I have a good intuition for what's going on with those story stocks. And I still feel I have good intuition, but I wasn't paying attention to the patterns, and especially I was trading against it. And with DIA and EWW, I found I have no intuition about those stocks. And so that has forced me to really sharpen my skills on the patterns, and applying them back to what I want to trade for whatever reason. It has really helped me. So that was really well worth doing. And so again, I want to reiterate, thank you for it.
Yep. What do you see? Yep. It's what do you see? If you don't already have a preconceived notion, you have to go see in order to conceive a notion, and it forces you to see what's actually there. That's why I like to see when I go through the coaching. And if you take a look at the standard 7 questions for framing trades, it's always, what do you see first? Describe patterns, indicators, metrics, whatever it may be. Make a quantitative description. We are in the fall, and or whatever. And it forces you to describe exactly what you see as the baseline. Not what I think it's going to do, not how I feel, but start with what it is that you see. Okay, go.
Yeah, and then I'm also spending some time on automated systems. I'm trying to build a foundation for what the systems is. So George and others, you're sort of far ahead of me. But I've done my own analysis that maybe I can share at a later time. Ken, I'm looking to see how much opportunity is available. So rather than the results, I've been looking at the most favorable excursion, and it's pretty amazing that using these 4 patterns, there's an average of 10 R, a range between 8 to 12 R available. So what it tells me is if I can be 20% efficient, that's amazing, even if I can get to that.
Yeah.
Um, so that was
That's the whole basis of doing all the stats on a normal day, understanding what the range stat is, what the R10 is 1/10 of that, knowing from the open, how far does it go to the low of the day statistically in order to get the fail stat. All of those things help us define a standard day and how much is reasonably available. And if I can be 20 to 30% efficient inside those moves, I'm going to make money every day. That's all. You don't have to, squeeze every drop of juice out of the grape. You don't have to be perfect.
Yeah, so I think that really brought it made it clear to me that there's so much opportunity available with these patterns. And the last point is 2 weeks ago when you were pointing out 10 minutes versus 3 minutes. So that was also a really good direction. I'm using it to sharpen my entry exit. What I found is, for example, looking at the higher time frame. So if executing on 3 minutes, I look at the 10-minute time frame. If the price is anywhere near the dragon range, I want to stay out. I want it to break out of the dragon before entry. So that's been helpful.
Yep. Yep. That's a nice little bracket in there. The 3, 10, 30 bracket is nice.
Yeah.
Okay. I got it. Yeah. 14-hour week progress and learnings. Yeah. The slope of the RL10, that is so important. This from peak to peak, from point to point, that's the channel. And how far does it fall from here before I'm short? And how far does it have to bounce off of here before I'm long? That's the whole idea of the minimum manageable risk box. If I've got an MMRB on either end of that curve, then I've got a chance at 80%. 80% of the move is available to me if I can get in early enough. And I'm always going to give one back on the other end. Okay, keep going.
Yeah, the slope. So that was from 2 weeks ago. The slope has really helped me quite a bit. I wasn't really aware of it, but ever since becoming aware of it, it just is magical. So I think for now I'm good. I'm just going to continue trading. My goal for June is to continue with my consistency. So I'd like to keep end June with 12 hour per week for the 4 weeks, and then evaluate going forward. But I feel I'm in a very good state mentally.
Yeah, one of the things I want you to listen for is the Hamad is starting to see this now too, that each of those little individual trades, we're trying to be excellent and proficient on each one of those. And Luke showed us that when you just take the aggregate daily trade and treat that as sort of your net for the day as one collaboration, and then what the weekly trade is. Once you are at a certain level of discipline on the individual trades, you end up managing the daily and the weekly chunks because you realize that you're not missing the huge moves and you're not getting burned by big losses. So as long as you're operating in some kind of harmonious state in here and not cutting off your own thumbs, then the management goal is a good day at work. And what is the aggregate of that? And if you're trading, you know, a 50-50 system that pays 3-2, it doesn't seem like much until you look at what that daily net is and then what the weekly net is. You start looking at that and say, holy crap, there's some amazing possibilities in that. Again, it's like building that long sloping ramp to build your pyramids, you know, with a 1% slope. You just keep grinding away like the Burma Road, just keep stacking R's. And pretty soon you overcome that hurdle rate to the land of performance. So you start getting this phase 1, you're just discovering the patterns. Phase 2, you're developing skills. And as you develop skills, you start being able to peek through the wall or over the wall to the land of performance when the thing is really just going. And that's where you get to the top of the hill. And the secret is you got to remember that's a long slug. It's grinding. And that's why, to me, you know, my resilient badger inside my little matrix, if I look at that 3x3 model, you know, I have the resilient badger is my centerpiece. That's the one that never quits, relentless. He has the teeth and the claws to do the work and a thick skin. And he knows what he's about. And then the diligent scholar is studying everything. And then the mindful scout is looking around, seeing what's next. And then those three guys together get me into the land of performance. And you guys are all at the point where you're leaving behind the anxiety because you're realizing, because of evidence, that this is doable.
Yeah.
You know, your introverted expert has learned how to talk in public without fear because he gives you support and you learn from others, from their little shared gold. And your anxious perfectionist realizes, hey, it's just a coin flip with a certain payoff. Each trade doesn't have to be perfect. It just has to be correct. I have to play the hand right. You know, and then the reluctant leader, this is really about being an autonomous person. And that is being the leader of your own investment process. The locus of control is inside you. That's the commitment that you got to make to go your own way, to do the numbers, to do the due diligence. And then after that, you start getting into the land of performance. You're fine. You got the master craftsman. You got the Dharma warrior in support of your family. You know, a resilient badger as the sidekick to a Dharma warrior. You don't get in my way, you know. And then the resourceful catalyst is how you pull together the different pieces and parts of your team to work together for leverage. So that's that 3x3 matrix is really key. And this is the main insight here. Once you get that industrial process, you're making a road to go over to Himalayas, and daily nets and then weekly net. And in 20 years, you got 50 weeks. That's 1,000 iterations of the weekly net. That's where your performance is coming from. So we want to get through these other stages to the point where we're trading with skin in the game. So keep marching. All right, Jonathan, bring us home.
All right. It's really been interesting hearing you guys talk about the automated trading. It's something I really don't know anything about. So getting a little bit of an education, I'll have to look more into that as time goes by. But I was just working on my old-fashioned by hand trading this past week, and I did some rearranging of how I'm displaying things, and worked on some of my spreadsheets that I had to do my calculations for me, and just limiting to looking at DIA, EWW, XLE, FI, and I had EWZ just in there as well, which I traded today. And I have thumbnails for 3 minutes, thumbnails for 10 minutes, and then my main tactical charts that I'm working off of. And like today, I just took EWZ because it had the biggest gap and had to move after the open. So I'm really just trying to, develop a small universe of names that, I can pick out the 1 or 2 names that look like they're having better days, and just keep it simple and trade those. Sometimes I think really all I need is EWW and DIA. There are occasionally days where neither of them are doing very much. For most days, I can get something productive out of those to meet my goals. But I seem to really favor being on the 3 minute, and having 6 charts, 6 10-minute thumbnails and 6 3-minute thumbnails. Even that sometimes it's a lot to look at, deciding, well, do I want to trade this on the 10-minute? Do I want to do this on the 3-minute? If I'm looking at the 10-minute, I want to roll down, I might miss it on the 3 minutes. So if I need to just really make a decision to commit that I'm just going to look at 3-minute charts, and I have those kind of set up as to which ones I favor, with the higher time frames. But that needs to be an either or, just to be able to keep focused.
Yeah, I think you're in good shape. That you're building muscle memory.
Mm-hmm.
And one of the things in your future with the mechanical trading or the automated trading these guys are doing, if they've got a system that looks like it's ready for production, it's a simple matter for you to compare their rules to what personally will work. And then that gives you the basis for being able to trust the machine to trade for you. That's one of the byproducts of the hands-on approach, that when you can do math in your head, it's easier to learn to trust a calculator within reason.
Well, I think there's value even just with, rules-based discretionary trading. If you can get things so clear that it could be automated, just going through that exercise is probably valuable. But I have to confess, I don't know the first thing about automated trading. I actually got a little book which I haven't read yet, just to kind of familiarize myself so I can know what you guys are talking about a little bit better. No, so I'll have to kind of get educated about that as time goes by.
Yep. Yeah, just keep marching, man. You're looking good on the dailies. Once around the horn, any last calls? You got about 11 minutes before the next one starts up. If not, I'm going to call adjourn on this one. Make sure you guys listen to that the video from yesterday. It's a good one. All right, guys, take good care. We will catch you on the flip flop.
Bye.
Good work tonight.
Bye. Thank you.
Bye.
Good work tonight.
Bye.